Hey everyone, I'm Justin Spicer from the Ohio State Legal Services Association, and I'm here with Megan Sullivan, managing attorney for the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Luke Minek, staff attorney at the Low Income Taxpayer Clinic of Southeastern Ohio Legal Services. Today we're going to be discussing how to operate or structure your small business. Feel free to comment below, and we will answer whatever questions we can. Luke?
Hello, as Justin said, today we're going to talk about the different ways you can operate your small business. This is the second of a series of Facebook Live events on self-employment. Today we'll briefly talk about some topics and go more in depth with these topics in the coming weeks.
When you start your small business, you'll need to decide how you want to operate your business. Choosing what type of business you operate involves two related decisions. First, tax treatment, and second, liability of the business owner. Today, we'll be talking about how to decide your small business's liability. So what is liability? Liability means who has financial responsibility for business debts.
So what are the types of businesses I can operate?
So there are four business structures individuals can choose to operate under: a sole proprietorship, a limited liability company, a partnership, or a corporation. 90% of small businesses choose either a sole proprietorship or a limited liability company.
A sole proprietorship, what is that?
So the first type of business structure, a sole proprietorship, is the simplest type of business organization. This structure is owned and operated by a single person. It is simple, low cost, and fast to set up. No separate legal entity is created. A legal entity means any company or organization that has legal rights and responsibilities that are separate and apart from the owner. Most people working for themselves would be considered sole proprietors.
Now, if my sole proprietorship was sued, who would be liable? My business or me as an individual?
So the sole proprietor has what's called unlimited liability. This means that any lawsuits against the business puts the business owner's personal money and property at risk and vice versa.
How's a sole proprietor taxed?
The sole proprietor reports their income like any other income, like W-2 income, retirement distributions, et cetera, on their individual return or Form 1040. They report their income and expenses for the business on what's called a Schedule C, and then the Schedule C is included with the owner's Form 1040.
So what's the difference between a sole proprietorship and a limited liability company, which was the second type of business structure you mentioned?
So a limited liability company, or an LLC, is a legal entity created under state law. A benefit to an LLC is that the owners are protected from the liabilities of the business, which means that if the business goes into debt or is sued, your personal money and property are protected.
How do I create an LLC?
First, you'll need to choose a name for that LLC. To do this, you need to search the Ohio Secretary of State's website to make sure your proposed business name has not been used. The name of your new business must be different from other businesses registered in Ohio. Think of the name of the LLC as like a phone number or an email address. Only one person, or in this case, a business, can have that name. Also, the name of the business has to end with either limited liability company, LLC, LTD period, or limited. For instance, your name might be Super Great Plumbing LLC or World's Best Tacos Limited. You'll need to complete a form with the Ohio Secretary of State's office and pay a filing fee to create your business. For more information, you can visit ohiosos.gov.
And how is an LLC taxed?
So a single owner LLC will report their income on a tax return just like a sole proprietor. The income and expenses of their LLC will be reported on a Schedule C and included with their Form 1040. The same thing happens for a multi-owner LLC. However, each owner will report their income based on their share of the business.
So the third type of business structure you mentioned was a partnership. Is a partnership the same as an LLC?
No, unlike an LLC, a partnership is a relationship between two or more people who come together to start a trade or business. There is no separate legal entity created. Each person contributes money, property, labor, or skills, and they each expect to share both the profits or the losses of the company, or of the business, I mean. Any number of people may join a partnership.
And like sole proprietorships, if a partnership is sued or cannot pay its debts, the partners are each fully liable or responsible for the debt.
How is a partnership taxed?
The partnership has to file an information return. An information return simply reports the income, deductions, gains, losses, etc. from its operations, but it does not pay income tax. Instead, profits and losses are reported on the information return are then reported by the partners on their individual tax returns based on their share in the business. If you decide to form a partnership, make sure you have a good accountant and tax preparer who has experience with partnerships.
What about a corporation, the fourth business structure you mentioned? What are the benefits of setting up a business as a corporation?
So like an LLC, corporations are treated by the law as legal entities. That is, the corporation has a life separate from its owners and has rights and duties of its own. The owners of the corporation are known as shareholders. Forming a corporation involves the transfer of money or property or both by the shareholders in exchange for shares in the corporation. The shareholders get their share profits when they are paid by the corporation as dividends. Dividends are paid on a regular basis, and they are one of the ways investors earn a return from investing in shares. Nowadays, these dividends are normally paid via direct deposit to the shareholders.
The other benefit of setting up a business as a corporation is that, like an LLC, the shareholders are not personally liable for the debts of the corporation. Instead, the corporation is liable for the debts.
And how's a corporation taxed?
So the profit of a corporation is taxed to the corporation when it's earned, and then is taxed to the shareholders when it's distributed as dividends. The corporation will need to file its own annual tax return. The taxation of a corporation is very nuanced, so make sure you have a good accountant and tax preparer who has experience with corporations.
Great. Thanks everyone for listening. Thanks to Luke and Megan for telling us about how to set up your business structure. As you can see, choosing how you operate your business can have a huge impact if your business is sued or goes into debt. And as a reminder, this is the second in a series of Tax Chat segments on self-employment. In the coming weeks, we will cover topics like keeping and gathering records for next year, tracking mileage for rideshare and delivery services like Uber, Lyft, and DoorDash, and everything you need to know about estimated taxes. For our next self-employment segment, join us October 7th as we talk about expenses and gathering records for next year. And remember, the video of this session and all the others in our Tax Chat series are available on our Facebook page. Thanks, everyone. See you next time.